Greetings, everybody. This is Jeff Scott, and this is my top-down review for July 11th, 2021. I titled today, The Markets Bought the Dip, and boy, did they on Friday. And now, do we roll the dice on higher highs? My email address to contact me is hgsidoc@gmail.com. Please subscribe if you're watching this on YouTube. I post this at a couple different boards that I participate in. I don't have a mailing list, and I don't mail people out information when I'm putting these out, mostly because, hey, I do this for fun. I don't do this as a business, so I don't have any kind of a contact management type software or anything. Okay. This is for education only. Anything I recommend in the spirit of education should not be considered investment advice. I am a doctor, not a broker, and most physicians have lost money with their investments. I am independent. I pay for the tools that I use, and I receive nothing from anybody that would make me say good or bad things about their tools or their educational services. Lastly, trading involves risk, and you alone are solely responsible for any investment decisions you make. I have been to countless numbers of seminars, watched thousands of videos, read hundreds of books, and I try and glean something from every interaction that can make me a better trader. Ian Woodward used to call it, be your own guru. And I think that is what you need to do. No one should care more about your money than you do. So you owe it to yourself to get an education and become the trader that you want to be, not the trader that I am or anybody else is. I own a lot of different technology that I use for trading, but if you come to my office when I'm not doing my day job, you'd see on my screens Tradestation and Thinkorswim, and I duplicate a lot of the indicator sets, the John Person stuff, the Dr. K, Sager stuff. Some don't work on every platform. And then you'll see HGSI and EdgeRater. From time to time, I may bring people to talk to you through this same media that I'm using, but I never take a penny, and if there's ever a discount or a fee offered to me, I ask them to give it back to you as a discount. For HGSI, the software, under free 30-day trial, it's truly free, not even a credit card. Under investing strategies, you'll find thousands of movies. I do not have a financial relationship with this company. I'm friends with the proprietor, and he's really built a great program that's helped me make a lot of money, and I like to give back. Stock patterns are cyclical, as I've said countless times in this rally. It's almost if we've dissected the top of this, and whenever it feels like we're about to enter a bear market, or certainly a significant correction, as it did late morning on Thursday, then it turns around and goes right back up to the prior highs. So the question is, are we going to come right back down and retest, or do we continue on to higher highs, to infinity and beyond, as that Toy Story movie did when I had little kids? And I think that's a question. Nobody knows that answer. I could guess. I think there's lots of signs of why we're probably closer to a top than a bottom. I still think we go lower, but what did I say last week? I thought we go higher first, and we'll see how this market goes this week. I also said, because of this uncertainty here, that I have raised cash at smaller positions. I've sold premium, meaning rather than being naked, I sell a lot of calls against my current positions, put some money in the bank. I lightened up during the week on my contras and my shorts, and it was a great day for me on Friday, and hopefully it was a great day for you as well. In fact, if I look at my sector review sheet, which has the different sectors here, materials, financials, energy, and so on and so forth. It's truly a sea of green. So Friday was a broad-based rally day. Now, was that enough to get us out of any risk? I don't think so, but let's take a look. Let's look at the major markets. Let me pull up, and let's open up here. This is Thinkorswim. So this is a 1-year chart, and pretty much a straight shot from the low of 1 year, which looks like about 3,100 and change, all the way up to a new closing an all-time high on Friday on the S&P futures. How outstanding is that? Now, last week I said I thought we'd get up to this fib extension, and if it's been like the other fib extensions, we typically have had some struggle to get to break out above that level. So a sideways motion here, maybe some backfilling would not be a surprise. If we continue going higher, it's going to start to feel like a climax run before this run is over. But what a run, and I hope you've been long with me and made some decent money. We're in a John Person buy signal. We have moved away from that 50. And to me, it's always easier to make money when I pull back and I'm breaking out. I'm breaking out from a high base, probably a little bit more risky. If we look at the NASDAQ futures, not the same degree of elevation over time, but I guess they started moving probably before the S&P. And you could see the NASDAQ futures had probably a new closing high, although the all-time high was set on Wednesday. Still looks very bullish. If I look at the Dow futures, this is one that doesn't look the same as the last two, as it has been going sideways now, going back through the last month and a half, but did have a new John Person buy signal. And if you look at it, it's potentially a new closing high there. I think it is, although the all-time high was set here on the shooting star day, and we're nowhere close to that. The Russell, big reversal day on Friday, but it was down on the week, and you can see the Russell is another index that, frankly, you could draw the box top here, the bottom here, and it probably started back here in early February. So the Russell's been sideways for quite some time, and it's in a John Person sell signal, though it won't take much to change that on Monday. Again, this is your daily futures. I look at the VIX, and this is using the VX. You could see that it came right back down on Friday after rising from this buy signal on Tuesday. Again, it was a 4-day market, so there was no Monday this week. And if I look at the dollar, which has been in rally mode, which was really hurting small caps, the dollar pulled back Thursday and Friday, and that was probably why small caps rallied into the end of the week. If I was to switch this to weeklies, let's just look at it with the PowerPoint. Weeklies, you could see, here's the Russell sideways for some time, as well as the Dow. And you could see how the VIX has steadily come down. And even on the weekly, we can see, actually that's the daily. No, is that the weekly or daily? This is the weekly, my bad. You can see just the huge moves that we've had off of the bottoms last March. And yet they're extended. The VIX has gone nowhere. And even though we had a dollar rally, it's still the lower part of its range. So I mixed up those two. Let's take a look at the expected moves. And then I got a little bit of a treat for you. I did a little extra research for today. So this is the S&P futures, kind of a sideways move. It stayed within its range the entire week. Did touch the low expected range. Now, if you think about this, if you sold a strangle at the money, then you had this much dollars for the call, this much dollars for the put. And as long as the stock stays within the green and the red, you made money. So if you sold the strangle, you made money. So the S&P futures really did nothing on the week, very sideways. If you look at the NASDAQ futures, on Wednesday they came up and almost touched the top, and on Thursday they almost touched the bottom, and they ended up Friday at a positive day on the week. But again, all the action was captured within the upper and lower expected move. If I look at the Dow futures were different. The Dow futures broke down hard this week, but by the time the week returned, not only did they get back in within the expected move, but they closed at the top. So far all the indexes ended up closing within the expected range. The Russell, gave us a scare, and you could see the Thursday, it opened here, kind of where it closed on Wednesday, traded down, and then from the middle of the day on, it rallied hard, and then Friday it took out the high of that day and closed within the expected range. So all the major indexes closed within their expected range, which I was taught should happen about 65% of the time. The VIX jumped on Thursday, but closed at the bottom of the day, a red candle, and jumped back down in its range on Friday. And if I look at the Dow, oops, wrong button. Let me try that again. Sorry about that. Oh, where am I? I'm here. Not there. How about this one? And if we look at the dollar, which should be that should do it. The dollar traded up to the top of the expected range and closed actually below where it opened, so it reversed as well. Notice the dollar reversal and the Russell reversal sort of mirror images of each other. Now, I've been talking about these for a while, and I asked myself the question, what does this mean? Is this a signal? Is this something that you can actually use, that I can use? So I did a little research, and I looked going back 1 year. This is the current weekly expected move for each of the indexes, and you could see, when you think about the spiders, diamonds, and the Russell, they're going to be a tenth as much as the futures, just the way that they're built. You can see the dollar, ETF, the VIX, gold, USO, and then you could see some of our favorite FANG stocks. Now, Amazon is a super expensive stock, so when you look at $146 as the expected move, well, actually, to be fair, it's plus or minus each of these. So if Amazon closed at 37, that's like 4% move for the week. It's a pretty big move, but 146 points seems like a lot. It's only about 4%. Then I asked how often on the weekly expected moves, so this would be a daily chart with the weekly expected moves, as I show you here, how often do they touch? And it's interesting that only, no more than about 55 to 57% at the most part, and as low as 30%, do they even touch on their weekly expected move. Now, the touch could be up at the green bar or down at the red bar, and you can see again the up, down, and that this column shows you how often it doesn't touch. And then probably the most important column is how often does it close within the expected move. Now, if it's plus or minus 1 standard deviation, this number should be about 65%. Interestingly, it averages 76%, And for several of these, they're over 80%. And what does that tell you? It tells you that the market makers have set the expected move high, so premium is high, which favors option sellers. Now here we have the same analysis looking at a monthly expected move. Notice much less often are there touches, especially on the futures. And then how often does it close in? On the monthly expected move, really, again, if it's supposed to be 65%, then why is it an average of 87%? And that just goes to show you of why option sellers make money, because these options are priced to favor the seller. Let's look underneath the indexes for a few minutes. What about rates? There was a lot of concerns about economics. There was some bad numbers in the US. There's the Delta variant. Then you had China potentially reducing reserves, which will be a sign that their GDP might be falling. And then Tokyo canceling spectators at the Olympics. Well, what happens if the economy is going to miss? Then you're going to see rates come down. And this lower line here on both of them was a line that I had written, probably 15 years ago. And it sort of, to me, was below this line was when we were worried about economic prosperity. And between the lines, and somehow this line fell off over the years, this is where the market was really happy. And then when I get above this line from interest rates is when the interest rates start to slow down the market. So we've dropped down to where there's concern about the economics of this country and the world. Falling rates should be good for REITs, MLPs, utilities, dividend payers, and all of those showed up on my review. Home builders probably have some confounding things where they didn't look as good, and perhaps a lot of it is why I still have echoes in my house. The house that I moved to in Jupiter, the furniture is taking forever. And the house I'm building in Santa Fe, thank God we already bought the lumber for that, but it's still tough to get things. Now, I remember this thing here, credit spreads. There's various tools to look at it. This is one of them from the Fed. This spiked as the market sold off and as there was economic turmoil related to COVID. And so it's something that I look at. I don't look at it every day because frankly, why bother? Because for the most part, it does nothing. And I just wanted to point out that even with the economic concerns that we might be seeing, the credit spreads are not worried. Now, something else happened this week, and you can't see the IWM real well, but it's in there. The AD lines on both small caps and large caps rolled over. Not only did they start to roll over, you had potentially a lower high here, and you're below the prior high. So AD lines are weakening along with the indices. Here is the NYSE. Now, the NYSE, lower high, so that might be bearish. Notice in here you actually got three. You got the spiders, the Qs, and the diamonds, and they're doing well. What's not doing well would be transports, and somewhere in here is the IWM. I think this, okay. Another thing that really sold off hard as rates have risen is bonds, and bonds had a pretty good week with the rates falling. Now, breadth. Stocks above the 200 came down, stocks above the 40 came down. So looking at that, we have a lot of stocks that are below their 200, above their 200, but less than 40. And that would be choppy. And, that's not something we want to see. The 3-month new high, new low, this is the weekly one. And you could see despite the fact breath eased, despite the fact the AD lines are weakening, this just shows you the strength of Friday. Actually, the 12-week or 3-month new high, new low, the T2121 from Warden, is actually higher, still below the danger sign, but still shows that on the short term, maybe we still have some concern. And then I went very short term and broke it down to hourly. And you could see what happened on Thursday. Thursday, we ripped all the way to the bottom, and Friday was so strong, we ripped all the way back up to the top. And when I looked at this rate of change down here, just showing you how massive the day was, and I looked back 10 years, 15 years, it was similar at the end of 2008, but that wasn't the end of that prior decline. So I just think it shows the volatility of the market, and why maybe we might want to have some concern. Another reason to have concern is here's the daily Mcclellan, new highs, higher highs, zero line rejects, and divergences, things that make you worried a little bit about the market. To be fair, it's been like that for quite some time. The weekly Mcclellan, new highs, zero line reject, and divergences. You've got these going down on the peaks while this one's going up. The buckets. If you look at it on Friday close, it looks pretty neutral. Maybe a little bit bearish, but it's neutral. If you look at on Thursday close, it shows a very bearish 72% of the stocks in the S&P 1500 are below their Bollinger Band, while 72% below the midline, while 14% are below the band, another 17% at the bottom of their band, so 30%. Now, I actually sent out a couple of texts saying the market's going to rebound, and what made me think that was, here is the Q edge tool from Sagar, and here it shows closing at 13% below the Bollinger Bands. It was in the 30s midday, and I started seeing a lot of stocks starting to reverse. So the buckets helped me a lot, and thank you, Sagar, for putting it real time into Q. I wouldn't expect a Hindenburg all-time highs, and we don't have one. If you look at it, you do have enough new highs, although it's not a big number on the NASDAQ and the NYSE, but you have almost new lows. And without new lows, you're not going to get a Hindenburg omen. Remember, this is a signal that fires at time of a topping market, and it represents the pros selling to the amateurs. You got a lot of new highs, a lot of new lows, but we don't see that. We don't see the new lows, and frankly, we saw a lot more new highs earlier in the last month or two. Market tone, we had a series of kahunas on the major indexes on Friday, and that shifted us to green or positive for most of the markets on the Woody indicator, so much more bullish. Now, what a crazy week. If you take the fundamentals from last, Saturday, Sunday, or Monday, because Monday was closed, and you ask, based upon those fundamentals, how did the market perform going forward this week? So I have EPS rank, and notice it's all negative. Doesn't matter what your EPS rank. And up into the top EPS, it did get better, less negative, but the highest earnings per share ranked stocks sold off. Same thing with relative strength. The highest relative strength ranked stocks sold off. If I look up here, ERG, which is EPS plus relative strength plus group rank, 99 plus 99 plus 99, and I start here because I eliminate where there's very few stocks, and I end around here, it's just a mess. And I think at the individual stock level, it was a very ugly week. Again, Friday was not so ugly. When I look at performance on the week, the S&P 500 was up 0.4. Green represents my buy watch, which was up, or my holdings were up 2.5%. My buy watch, which I shared with you last week, was up 1.58, so that's 3 or 4 times greater than the S&P. And my filter buys, which are ones that meet a bunch of other criteria, were actually up over 4%. Surprising to me, although the Market Smith was above the S&P, the IBD 50, the weekend review, which is somewhere down here, and the blue dots, one of my favorite scans, all underperformed. Here's the 85. Positive, but less than the S&P. So what does this tell me? It tells me growth was not great. I know why I perform well. My largest holding is Amazon. It had a massive week. It also tells me that it's a tough market, especially when I see some of the things on the bottom that are Bible gap ups were the worst group, things that gapped up on Friday. 3 times volume on Friday, bad. Leaders extended or gone, all underperformed. So it's just that sense of this rapidly changing market, different industry groups, different indexes, and this is a tough market to make money. I'm happy. Sector strength, you can see a number of kahunas on Friday, and if we look at the Woody, they're all green and yellow, flipped off a couple of reds, mixed, but mixed bullish. Now, here's some pictures from the Q tools. I love these pictures. So I already showed you the buckets. So the buckets are done real time here as well. This one here is looking at 1 day, 2 day, 5 day, 10 day, and 30 days. It's looking at sectors, it's looking at industry groups, and it's looking at stocks. What you can see is Friday was so strong that 93% of stocks were up, all industry groups were up, and all sectors were up. If you lost money on Friday, this has got to be painful, and I apologize for that. Now, what's interesting is if you go back a month, it doesn't look this good. And even over 5 days, this is a major change. So have we reversed and started a new leg up, or was this just some post-holiday cheer and the end of and an oversold rally and the end of the summer rally? We'll see. If we look at 5 days, only 2 sectors were up, and that would be in the red, so that would be real estate and utilities. Not a surprise. What are those? Those are defensive. If we look over a month, 10 days, it was negative. If we go look at what happened on the last 2 days, well, Friday was 11 up and 0 down, and you could see in red, we had some major moves on Friday. Now, when I use the Q tools intraday, and actually I made a couple of trades this week intraday, I can actually look at real time, but it's like midnight on Saturday night, so there's no real time. So this is end of the day on Friday. You can see that energy and discretionary and financials led. And talk about a flip-flop market. Look how strong utilities, healthcare, and staples were, and now they're the bottom. Look how weak energy and financials were, and now they're at the top. It's a tough market when it's flip-flopping back and forth. But if I took those top 3 and I looked at what were the industry groups, I see a lot of, and there's 147, so there's one higher, but I can see what some of the top industry groups are. And if I take the first 5 or so, I can get a list of stocks, and where'd that go? Hold on a second. I guess I can't show you. And that these are just some of the stocks that I found. This this is daily, weekly on the left, daily on the right. Franklin Resources pull back to support and a new buy signal, pull back to support on Madison and a new buy signal. They pull back on Oxford Industries and a breakout in a new buy signal. So I'm able to look at stocks intraday and find what's undervalued by using the Q tools. Now, canaries in the coal mine, I've been talking about the breakout here, pretty much a sideways market, probably healthy, consolidating above the major moving averages. Now, what's going to be the end of this is probably what's coming up, which is earnings, as many of these have earnings over the next couple of weeks. But you can see these are the big boys, and some of them are behaving now better than others. Know your news and earnings. Here's some of the major news events this week. As I look through this, obviously nothing on Monday. Core CPI for June, federal budget, PPI. So if it's too hot, we'll hear talks about tapering and rates. If it's too low, rates will fall, and that's probably bad. So we need a Goldilocks report. We got some jobless claims on Thursday, some pricing, Philadelphia Fed, and then on Friday we have some retail sales and consumer sentiment. So maybe a medium to light week on news, although right now I think news is so important, it will be flip-flopping the market. And if you look at earnings for this week, banks are in full force. JP Morgan, Goldman on Tuesday. If you own any of these, it's an important day. But you got big banks, little banks. You got some airlines in here. It's worth taking a look at. Most of my big earnings start next week. Just looking at this, although I do have some Bank of America still, which was one of the stocks that rebounded on Friday. As I've said before, it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. So we needed a neck brace to weather the rotation and volatility that we saw this week at or near all-time highs. S&P, Dow, and Nasdaq had small gains, finished the week in record territory. The small caps decline. Growth concerns, as I mentioned. Following an intraday reversal Thursday, we had a strong day on Friday, and you could see that we're coming around 15% for year-to-date performance on the major indices. I've been doing this for a long time, and there's a lot of years where the markets don't have a 15% return, and that's only the first 6 months. My week was all over the place, but finished strong despite the weakness on the big caps on Friday. An Amazon breakout mitigated much of my losses. I've decided I'm going to only show you my P&L quarterly. I showed it to you last week. I'm up from there, so I'm over 75% year to date. This week I look to manage a number of expiring options positions. Likely will raise cash heading into the end of the month Fed meeting, as well as upcoming earnings. It's hard for me to be real bearish here, but seasonality is going to turn against us. Summer doldrums are upon us, and any strength in the economy will be met by further discussions of tapering and rate increases. Like always, it pays to trade the market we get, not what I or any other self-proclaimed pundits think we will get prior to the market opening. I just want to mention, I feel, I'm going to talk about it anyways. There is an event next week. I think it's Wealth 365. It is something that I participated in last, look a while, okay. What is this doing to me? Oh, there you go. I just got hit with something I didn't want to get hit with in Microsoft. Fortunately, I have virus protector, something with the, I think it's called the Wealth Charts 365 Summit. I did this last quarter. I thought it was extremely well done. It's an entire week of different educators and software developers coming up. They have an interesting platform, which I'm not going to talk about tonight, but there's a lot of free education, so something to look for. Rob Hoffman's becomeabettertrader.com, and it's a Wealth Charts or Wealth 365 Summit. You might find that to be useful. I'll be watching it. All right, very quickly, let's look at Tradestation at the status of the major indexes. So this is the S&P or the E-mini futures. So for those who've not been here before, I'm all about the market. I was responding to some questions at a board about triple Qs. TQQQ, the 3X or the Qs, is wonderful in a rising market. It's horrible in a falling market. It's a trading vehicle. If you're a market timer and you don't want to worry about individual stocks, it's a wonderful trading vehicle. You just got to be on the right side. So the market, it will 50, 60% or more of your stock performance, your portfolio performance next week is going to be based upon the market. Maybe 20% to 30% on the sector and 10 to 20% on how good of a stock picker you are. So the market matters. E-minis, big run up. It's in a buy signal on the daily, a buy on the weekly, a buy on the monthly. Looks like a lot of green candles, which is good. That's the Alexander Elder Impulse Indicator. Green, you could be long or holding. Blue is neutral, and red, you should be shorting, or holding, you shouldn't be buying. So it's okay to be long. There is no daily MACD divergence dots, nor are there weekly. That's actually very good. We're at the top of the envelope. That's a little bit concerning, but as you can see in the past, especially on the daily, we can run up the top of that envelope for quite some time. The weekly bongo, which is right here, is green. That's awesome. And then the other thing to point out is that your high jump is at 78.60. When it gets above 90, my hairs stand up on the back of my neck, and above 95, it's time to start thinking about getting out because you're too stretched. Every time, you can look here. Here was a time we got above 90, 95, 99, 100, and what happens? When you're the highest high that you've been, or the highest stretch from your averages, usually comes back down. We're nowhere close, so we could see the E-minis still go higher. No guarantee they will, but they could. The Dow's just got a new buy signal, also green. You could tell the Dow's been in a short-term pullback because their weekly bongo is red. 58, 59 rather on their high jump. Looks like it wants to go higher. You look at the NASDAQ futures. Here you see a lot of these red dots. So these red dots tell me that if you look here versus here, we clearly have higher highs. If I look at the MACD histogram, I do not. So you perhaps have less participation, less power. We're at 81% on the high jump bar. It would not surprise me to see the NASDAQ to become the first one to roll over when the market decides to stop going up as it's getting the most extended. And lastly, the Russell looks different, doesn't it? You've got a sell signal on both the Laguerre and the person. You bounced on Friday, but you didn't get a buy signal, nor did you get a green bar. You are in a weekly buy, but going sideways, and a monthly buy. High jump bar as low as you'd expect, and look, the weekly bongo, it's been negative going back for about 3 months. So the Russell does not look nearly as healthy as the E-minis, the NASDAQ, or the Dow. But we already knew that, didn't we? Very quickly, let's take a look at the dollar, and you'll see something that has had a big rally, but now has a sell signal. The small stocks seem to rally, in my experience, when the dollar is weak. Now, is it a surprise? What was the high jump on? So July 1st, we hit the max on the high jump. Back up here, we hit the max on the high jump and the market pulled down. Back up here, we hit the max of the high jump and the market pulled down. So it wouldn't surprise me to see the dollar pullback, which should support especially small cap equities. Noticing on the weekly it's in a buy, monthlies it's on a buy, but it's way off its prior highs. Now let's go into HGSI. So I've started with the market analysis groups, and there's 30 some stocks here. Let's go to the top down view. Perfect. And make sure I rank it by combo. And this tells me the strength. Now you have to know what your combo shows, and this combo is going to be mostly Friday, some for 5 days, and a little bit for 3 weeks. And you can see the NYSE, Dow, NASDAQ are right at the top, mid caps. Everything but small caps, but the small caps had a decent day on Friday as well. So no question, there was good participation and this should have been a good end of the week and feeling good right now for growth. But we know when you look at the 5-day performance, it's mostly red. So let's take a look at what we see. I know this is repetition, but what did I say before? It's all about the market. Here's the S&P 500, great run up, not at the top of the high jump. This looks great, supported by the moving averages. If I had to pick long or short on the S&P right now on Sunday morning, I pick long. How about the Dow Jones Industrial Average? Sideways move and maybe a breakout. Had a mobile breakout here. A kahuna. I might convince myself that the market catcher is actually less bearish, which is a positive divergence. It looks good on the weekly. The Dow, certainly those 30 stocks look to go higher. The Nasdaq composite in a beautiful breakout move here. Pull back on Friday down to the 17-day moving average and popped. So just what you want to see an index do, shallow pullback and then move up to new highs. Again, more bullish than bearish, absolutely, but this has been a long run. Look at the Russell, the weakness, and look at the sideways move in the Russell here, going back into February. Russell's been in a trading range for a long time. You can see it even better on the weekly. Now I like to look at the IBD 50, gives you a sense of what growth is doing. And if you're sitting here mad because you didn't make any money this week and you trade IBD 50 stocks, which, hey, I do too, you can see, yeah, the market went nowhere this week and you fell pretty hard on Wednesday and Thursday with a nice bounce on Friday on the IBD 50, but a weak WEAK weak, WEEK for, I can't even talk this late, on IBD 50 canceling type stocks. If we look at the FANG, this is a skinnier FANG than the FANG that I look at, which is my canaries. You could see a pullback on Friday, but really a shallow pullback holding at the 8-day exponential. Look how strong, threatening old highs on the FNGS micro FANGs ETF or ETN. I guess it's an ETN. If I look at biotech, boy, isn't Biogen IDEC, where we made a lot of money on, hope you took the trade as well and got out, isn't it being kicked around? You know, I guess if your drug gets approved by a whisker, you shouldn't charge $57,000 a year for it, because that's driving a lot of attention. It's their Alzheimer drug. So you can see the NASDAQ, just this is NASDAQ, a beautiful up move. But if I look at the NASDAQ biotech, no, that's one. I will find it eventually. It's going to be maybe the next one. You could see that it is really, you know, do I want to be an artist and say cup and handle? I don't know. I mean, on the weekly, it looks kind of like that. But we'll see. I like to see biotech break out. It's been going sideways the last couple of weeks. Semiconductors have been stronger, but they too have been going sideways the last couple of weeks. What else would I look at here? I guess I like to look at the Cathie Wood groups. And again, these ETFs reflect the stocks within a specific industry. And if she's going to buy that industry, until she's big enough to personally move the industry, she's going to be sort of subjected to industry group rotation. So here is robots, and if I want to be nice, I'll call it sideways. Here is fintech innovation, it's above the 50, sideways. Here's genomics at the 50, a little bit above, sideways. Innovation, sideways. Israel, sideways. Next gen internet, sideways. Space exploration, it's kind of too new, but very loose. And you got the two zillionaires, Bezos and I guess probably Elon Musk, who's going to get to space first. I'm sorry. Since I own some of the SPCE, although I hedged it, I hope it doesn't blow up. this week because that'll kill the stock. But if it's a successful launch, it'll be interesting to see where it goes. I think it, frankly, is way overpriced. Look at the dollar, bullish dollar fund. You could see a breakout above the 200 and then a pullback on Friday, Thursday and Friday. Again, probably triggering the small cap rally. We're not going to look at the VIX, it's quite low. If I look at gold, you know, everybody keeps saying it's going to run, it's going to run, it's going to run. And it had a really good day on Friday, up 0.5%. But it's still got a lot of overhead supply to get through. Am I bullish on gold? Yeah, I think the dollar's coming down. It's going to get worse, and I think gold's going higher. But I got to wait till it actually happens. If I look at gold miners, it looks just as bad below the moving averages. And if I look at silver, so to me, this is where it comes into trade the market you have, not what people say you have. If you've bought into the argument of the silver rally, and I got whipsawed a couple times, especially when the meme players were in it, it still isn't moving. It will move. Just watch your charts. You'll have time to get in. You don't have to, I mean, if you're buying options, they're just expiring worthless if it doesn't do anything. And I think now we'll move in to look at industry groups. So then I go to 7, warehouse view. I've got 174 industry groups. And I am going to go to 2-day force. This tells me how many groups have short-term momentum up. Looks like 88. How about short-term momentum down, which would be 2-day down? It looks like just biotech figures. Cassava, and I think they're linked to Biogen, I believe, as well. Big shooting star closing near the bottom of the candle. And Biogen, you could see its weekly move here, but Biogen had a big run up on positive data on their Alzheimer's, and now they've come back. So not a big surprise. So decidedly bullish. If I look at intermediate 5-day down, I see 42. And if I look at 5-day up, I see 57. So short term, very bullish. Intermediate term, a little bit more mixed. Now I typically will go through the top 10 bullish groups. So let's look at those. So let me get everything set here. I've got my industries coming from the major market user groups, which Ron Brown puts together. I've got my 2-day force ranking. So price and volume, price change times volume, 2-day exponential. And what comes to the top is electrical components. So if I right click, left click to change the index group, I get the different stocks in the group. Now this group is here because of this, and whether this is the world's greatest news or it's a meme play. You had a day that went from 2 to 20 and closed at 10. You can play that with your money. I'm not touching it with my money. And then you get the index, and I'm only going to look at stocks that are above the index. Second one is automobiles. So Tesla, Tesla's been basing. If I didn't know what this chart was, I would see a pullback to support. I'd be looking for some momentum to come in, a kahuna, pocket pivot, Bible gap up, person's buy signal, and I'd be looking to buy this. Its PE makes me nervous, plus it's Tesla, so you've got issues around the government. But if I looked at that chart, I would bet the chart's going higher, not lower. I wouldn't necessarily be shorting it here, but if it breaks down below support, it might be more interesting. GM, Ford. Ford had a nice run here. It had a great day on Friday. Is it getting ready to go again? I don't know. Look at the long bottoming tail. Probably needs a little bit more time. Next group down is banks. This will be regional banks. And there are a lot of these that looked interesting. What did I do? Let's Go back to raw combo. I would probably skip this pattern. That's a big reversal. That looks like that stock I said I wouldn't trade. Cohen and Company, SVB Financial. I like this one. It's expensive. If I remember correctly, this is an internet bank, I think, which is clearly all right, maybe it's not an internet bank. Big run up, sideways move. Here, this red line is a chandelier stop. It had a mobile breakout from a squeeze, a new John person buy, and a kahuna. It's kind of what I like to buy. It's a pattern I like. I wish the bongo was green. I would potentially, if I was going to consider this stock, it's got to get above the chandelier stop and close before I would buy it. So I might put a buy stop above it, but I'd rather have it move up, retest, and then take it when it starts to move up again. But this is an expensive stock, which means I can talk about it, but we're probably not buying it. You can certainly do options on it. Truist, too far down the pattern, looks interesting, but not yet. PNC, here's the index. Now there were a couple that I liked. We'll look at them when we go through my top-down approach, or my bottoms-up approach. Internet media, Shopify. Ugh, I would have been up a lot of money this week if it wasn't for Shop. Oh, that's Snap. I can't read. Start with Snap. So Snap, sideways move. I don't use it. I don't get it. The weekly looks pretty good, but then it sold off. I'm not interested. Some of you may. Facebook, I am in. Beautiful pattern. Despite all the negative news and all the assaults, it just keeps on going higher. A little bit of a pullback. It's got issues with the government, issues with regulation, but it just keeps on going, and I don't know why that's going to stop. Look at the the growth rate's ultimately going to slow. That might be why it stops, but still got a big growth rate for a PE of less than 30. Twitter, I don't get it. Moxian, don't know this one at all. Huge demand. I wonder if this is a meme play. Some type of Chinese platform probably would get nervous. We talked about Weibo last week, and it was funny because I woke up to it being about, this massive move up in the pre-markets. It gave us a viable gap up. It's held the low of the gap up. I'm still interested in Weibo. The reason why it had the massive lift on Monday was, or Tuesday rather, because of rumors about a potential take private by the chairman. Steel and raw materials, several of these look like they're setting up. We'll look at the top three. Cleveland Clinic, it's in an uptrend. It pulled back to the 50. It looks like it wants to run. And again, like the other, make sure it gets above its chandelier stop before you start buying this thing. Look at the bottoming candle here. This one has a mobile breakout from a squeeze, a new person buy, a pocket pivot, and a kahuna. I'm going to say the same thing about Valet. Pull back to the 50 and a breakout here. This one's probably ready to go now. And I think Cleveland Cliff will be as well. BHP Billiton also breaking out here with 2 kahunas in 3 days. Pocket pivots, new John person buy. So, and then Rio Tinto I think looks the same as well. Still has to get above the 50. So I like the first 3 better. And they're things that if you really want to buy something Monday morning, and you know who I am talking to, that might be something to consider. REITs, change the index group. Somebody who has FOMO. Simon Property, who would think that after the malls were dead, between October at 63 and July, so 10 months, give or take. It only doubled. Excuse me. So I guess the malls are not dead. And again, forget the name, forget what it does. It's got great earnings per share growth, pays a 5.1% dividend. Let it take out its chandelier stock. This one looks like it's going higher. Prologis, they do big logistical warehouses, big up move, shallow saucer, and a breakout. Took out the chandelier high on Friday. This one looks very interesting to me. Weyerhaeuser. If lumber is still expensive, although the futures came down, this should be interesting. And you could see it pull back on the weekly. I'd probably wait for it to take out the 50. It's not that far away. This is probably 75 cents. But a break above the 50, this might be interesting to play as well. So there are stocks out there, 1.4% dividend. Ventas, I guess senior citizen housing. Loosey-goosey uptrend, pullback, and a breakout. Mobile breakout from a squeeze, pocket pivot, kahuna. Something to put on your watch list. Federal Realty Investment Trust, 3.5%, 3.6% dividend, pullback to the 50. Momentum down here. Let it get above the chandelier stop. That one looks interesting. So a bunch of REITs look pretty cool. Energy, one of the top 3 groups. Any of these look viable. EOG Resources, big uptrend, pull back to the 50. I think this guy does a lot of natural gas, so you got to know what you're buying. Great earnings per share growth, especially when you compare it to the PE. Almost a 2% dividend. EOG Resources looks good. It's already had a big run. Keep that in mind. Devon pull back to the 50, like that. Antero pull back to the 17. Probably like this even more. Mobile breakout from a squeeze, new person buy, pocket pivots, and a kahuna. So I'm just going down through the first bunch. I think I like Cinemark, so I want to look at that. Yep, big uptrend, sideways move, ready to break out again. XEC. Semiconductor devices, group number 8. Qualcomm. Is it ready to move? I'd like to see more momentum signals. It's right below the chandelier on the weekly where it failed, so not interested. Broadcom, I am interested. What's the difference between the two? The difference between the two is because I don't have anything sitting above the weekly. I've taken out the PSAR and the chandelier stop, got a mobile breakout from a squeeze, a new person buy, and a kahuna, big kahuna. So AVGO looks interesting. AMD pulled back some. I think long term this is a good stock. I was long after 82. As you can see, a lot of shallow pullbacks here. All right, number 9, communications equipment. Apple. Apple all-time high, all-time closing high, all-time high. Apple high jump, not all the way there yet. I mean, obviously, Apple's probably going to pause to refresh at some point. As you look at its history, it runs up to all-time high, pulls back, high, pull back, pull back. It's due a pullback. I wouldn't necessarily be chasing it. I've got some calls on Apple that I'm deep in the money on. Look at the earnings per share growth versus the multiple as Apple transitions from being a hardware to a services provider. As long as market holds, Apple is the market right now, and Apple looks pretty darn good. Cisco, an old name, uptrend, sideways, tightening up, right below the PSAR dot and the chandelier stop. I might put a buy stop above that. Fundamentals are not beautiful. And lastly, consumer finance. And I really like this first one, Capital One. Why? A medium tightness uptrend, pull back to the 50, and a breakout taking out the chandelier stop, mobile breakout from a squeeze, a new person buy, pocket pivot, and kahuna. You can see a shallow pullback on the weekly, a bottoming tail, pays a teeny dividend. This one looks like it wants to go higher. Discovery, very similar, also looks good. I want to buy them closer to the 50, which is why I skipped through Amex. Don't know anything about Synchrony Financial, but another nice run, pullback, ready to break out. This one I'd like to see it take out its chandelier first. So that's how I do top down. I want to look at the industry groups in the best in the market. If I wanted to do this using Q, I could go into industry groups, and this should give me all 147. Let's see if I did it right. Let's rank them. Look at this, all positive. And let's just look in the top 10. 1, 2, 3, 4, 5, 6. Give it a heart. Hit the peer analysis. And now open up all the stocks in those industry groups. There's not that many. And then I can hit the crown, get the best of the bunch to come to the top. And I might want to take a look at these stocks if I had more time. That would be doing top down using eBay. And that MATK, I think, is one that looked pretty good. Let's take a look at this. What did I do wrong, Jeffrey? Is it not in the database? Well, let me just pull it up into Q. MATX, that's why I can't read. And you could see, pull back to support automatic trend lines, new person buy 3 weeks ago, and it took out resistance here with a new person buy on Friday. Lots of my indicators firing MATX. Let's go look at an HGSI. There you go. It's a deeper pullback than I might like to see, but mobile breakout from a squeeze took out all of its resistance above it. Person buy, pocket pivot, kahuna, and a nice on the weekly MATX. The problem with it is it doesn't have a lot of volume, so that would be why I wouldn't be chasing after it. All right. So at this time I'm getting tired, which is normal. You're probably getting tired of listening to me, although I appreciate it, and I appreciate the comments that people make, the emails I get, and hitting the like button. My buy watch for this week. You can always stop this and write it down. There are a lot of stocks in this. Now, a couple caveats. Well, first of all, how do I get this list? I get this list by making a master list of lists, and I call that my consolidated buys. And I had over 2,000. And then I come up with price and volume. Actually, it's $5 and 500,000. I had 1,100, and I looked at every one of these 1,100. This list of lists comes from a lot of places. It comes from IBD. It comes from MarketSmith. It comes from Tradestation scans. It comes from, here we go, you can see some of them here. It comes from Thinkorswim scans. It comes from HGSI scans. I take the top stocks and all those scans, I put them in that consolidated list, and I look at them. So it's mostly a bottoms up And then these are the stocks that came out of that bottoms up. It's not a buy watch, or it's a watch, not a buy list. So I'm not buying these on Monday just because they look good to me on the weekend. But what I am going to do is I'm going to put them into a watch list. So if I was using Thinkorswim, for example, I could go over to Market Watch. I can go to Import. I haven't set it up as a buy list yet, so let me do that real quick. I'm going to do this live. I've opened up a Word document or a text document. File, similar to clipboard, text column. This is called Buy Watch. Paste, hit X, and save. Know where you saved it. Now I can go select a file, go into that directory where I just saved it, and hit OK. Oh, now you're going to do this to me today. And those various stocks have now populated a watch list or market watch list in Thinkorswim, and I could run a number of my indicators, and I would expect to see a lot of bullish indicators firing, and I am. Oh, that's all right. Now, in Tradestation, it's called radar screen. And you could see I have a lot of indicators across the top, and I have some charts there. So I have ways of monitoring these stocks during the day and other stocks looking for new opportunities. So we've got automobile retailers. I don't know about where you live, but they're charging list plus, and people can't even get cars. I mentioned other banks look good. Here's Bank of the Ozark. Sideways move, mobile breakout from the squeeze, new person buy, and a mobile breakout. Still like that. First Republic Bank I like a lot as well. So I have a wealth management bank, uptrend sideways, and a breaking out move. Showed you the consumer finances I liked. Let's look at Amazon for a second. Amazon broke out last Friday and then Tuesday. Went kind of sideways this week, but look where it's trading. It broke out of its box. It broke out of its all-time high. So Amazon is at an all-time high. Now, is this going to go off to the moon, or is it going to come back into the box? If I was a betting person, it's going to come back into the box. But Amazon looks great. Earnings are due on the 28th. I showed you some expiration production I liked. The MLPs, the thing about the MLPs that's really nice is this. Steady uptrends. Charts don't look back. New person buy, mobile breakout from a squeeze. But most importantly on Antero Midstream is a 10.9% dividend. So you're getting $1.10 per year on a $10 purchase. Just buy enough of it if you're buying it for the dividend so it makes a difference. REITs, we looked at a bunch of REITs. I showed you a couple semiconductors. Specialty apparel, Foot Locker looks really interesting here. Steel, and then I showed you the raw materials. Look at Schnitzer Steel. Again, it's got to get through the 50 and the chandelier stop, but you can see the group is turned up, and it's got a nice lineup of momentum indicators there. And a lot of earnings with this upcoming quarter, which isn't until October. So on that note, where do I sit? I'm more bullish than bearish. I took advantage of the all-time high in Amazon to bring my puts up and then sell some calls way out of the money to pay for the puts. Sort of building a collar for as we go into earnings season. And, the thing about U.S. options is no one says you've got to hold the option. You can sell it anytime you want. And I may change those options out on Monday. I hope you have a great week. I hope you make money. I hope you enjoy this. And really, if you do, please let your friends know, put comments in, hit the up thumb, because it's really embarrassing how little of a distribution I have. Now, I don't really care, but if I can help people, I like to help them. Good night, everybody. And I'm just going to leave the buy watch list up here for your pleasure. And actually, what I'm going to do is this. I'm going to pull it up on Thinkorswim, which you might be easier to see. And for those that say, no, I can see it better on the other, I'll pull it up on this. And if you stop your thing right now, you can go through my list of the stocks that I find interesting. Again, the other caveats are, if I already own it, I might not put it on the list. If it's too expensive, I probably don't put it on the list. If there's no options, I probably don't put it on the list. And like that MATX, if it's less than 500,000 shares, it doesn't make my list. Good night, everybody. Have a great week.